Hey, what's up, stock compounders? Brad here. So, we have another weekly installment of the Robinhood Roundup, or 10 stocks that millennial investors are buying, have bought in the last week. Now, I pull this data, these top 10 companies that Robinhood investors are buying, from robintrack.net. So you can check that out as well. You can even see, in the past hour, in the past 4 hours, past day, 3 days, week, what the top stocks are from Robinhood investors. So let's go through these. First thing I want to do is just explain these columns real quick. So market cap, it's basically the size of the business. It's the number of shares outstanding times the price of a share of stock. That's the market capitalization. And this kind of indicates how large or how small the company is. You can see the biggest is 1.56 trillion. Apple, I think Apple's the biggest company in the world right now. So when you're in the trillions, you have a very big company. If you're looking at something like 46 million, that is a very small company. Small companies tend to be, riskier in terms of your risk of losing money because they're just not very well established. They're in startup mode. They don't really have any earnings yet, so that tends to be a more risky endeavor than something in the trillions or even in the billions. Price to earnings ratio. This is an indicator of how cheap a business is. So as an investor, really what I'm doing is I'm putting money down today to be able to participate in future earnings that a business is bringing in. And we're really looking for businesses that can grow earnings over time and kind of defend those earnings, prevent competitors from coming in and stealing market share away. So, this is a static ratio. It's kind of based on today. So it doesn't tell us everything, but it's a good indicator for how cheap a business is. These X's essentially mean that the companies are putting out more money than they're bringing in. So there just aren't earnings to factor into this price to earnings ratio. There's a lot of X's here. Super investors. So this website, Dataroma, essentially what this does is it compiles what the best investors in the world are buying and selling recently and what they hold in their portfolio. So let's take a look at an example. So Bill Ackman, Pershing Square, we can see what Pershing Square has in the portfolio. So this is, what percentage of the portfolio these particular stocks make up. So you can see this is a fairly concentrated portfolio by Bill Ackman here. And so you can see the percentage of the portfolio. You can also see what was added or what was reduced in the most recent quarter, which was Q1 2020, between January 1st and March 31st. And you can see there were also some new buys. So this was the first time that Bill Ackman was adding these particular stocks to the portfolio, or at least they weren't in the portfolio in Q4 of 2019. So, you can take a look at a number of different great investors here. So the super investor kind of hack, to me, is one of the best ways to kind of create a list of stocks that you kind of dig into for investing. It's really bowling with bumpers, Monish Pabrai calls it. Because when you go out on your own and you try to pick stocks on your own, there's so many ways that you can lose money by doing that. There's so many different factors to consider when you're looking at a company to decide if it's a good investment or not. And the great thing about looking at what these super investors have bought or are holding is they've done that analysis already. Okay, so it's a lot safer to pick from stocks that are owned by super investors than to just go it on your own. So that's where you get the bowling with bumpers analogy. Your failure rate is going to be dramatically reduced if you go that route. And then here we have earnings yield and return on invested capital. These are the two metrics that are used by Joel Greenblatt in the Magic Formula. Great book by Joel Greenblatt, The Little Book That Beats the Market. He really dives into this screening tool known as the Magic Formula. Earnings yield is a measure of how cheap a business is. So the higher this number is, the better, the cheaper the business is. And then return on invested capital is a measure of how good a business is. And 67 is awesome. Basically anything over, I'd say anything over 20 is a solid business. Obviously you can't capture everything about how good a business is in one metric like return on invested capital. But I did a video yesterday on hidden moats or invisible moats. And the number one metric to kind of gauge whether a company is going to be a good long-term compounder, where you buy in and you hold it for the long term, which means you don't have to continuously find new investment ideas. That's really how Warren Buffett made his money. He identified these great businesses at fair prices and he just let it ride. He just sat on those businesses, just let those stocks sit in his portfolio for decades. And that's really the ultimate kind of investing approach, is to identify these long-term compounders, companies that can compound your money for you, so you don't have to keep moving your money around. And return on invested capital is the number one metric to kind of land on these 100 baggers or these long-term compounders. You can see here, Apple has a great return on invested capital. It's expensive right now. I'll talk more about that in a moment. But this is a really important column. And it's a little concerning that there's only two companies that even have a measure for return on invested capital. Value Investors Club. So this is another kind of bowling with bumpers approach. Joel Greenblatt created this website, the Value Investors Club. That's right here. And basically you can enter a stock ticker in here. So let's look at Amazon. And you can see when there were write-ups for Amazon. Now these are some great investors making these write-ups. They're basically kind of pitching their investment thesis on Amazon. And you can see there's one in March of 2020. If you're considering buying Amazon, I would highly recommend checking out this most recent Value Investors Club write-up for Amazon. And this is another way to kind of narrow down your starting list of companies. I would say if there isn't a Value Investors Club write-up from the last 2 years, say, don't even look at the company. It's a shortcut to only looking at businesses that other great investors have already looked at and found value in. Okay, so that's the Value Investors Club. And you can see there's only two on here that have had write-ups in the last couple of years. Amazon, which we just looked at, and Plug. Now Plug actually had a short write-up, which means this investor was betting on the stock going down. Okay, now that was quite a while ago. It's possible the price of Plug was higher then, so the short thesis made more sense. But if you're considering buying Plug, check out this write-up. Even though it's 2.5 years old, there's probably still going to be some valuable insights in there about this company. So let's talk about what these companies are in the top 10. So we've got an Israeli pharmaceutical company, number one. Okay, this is an ADR. It's a foreign stock that's available to U.S. investors, and I think what they do is kind of cancer-fighting drugs. I don't think this is a play on the pandemic. So I'm kind of curious about why this is the top buy from Robinhood investors in the last week. I don't know so much about it. It's a pretty small company, anything under 250 million market cap, you're not going to get these super investors buying. They're just too small. They're not going to move the needle on the portfolio at that size. Number two is, a virus vaccine play. And there's another virus vaccine play here at number 8. So you got a couple of those. I think with the recent spike in cases, investors are once again getting interested in these vaccine companies. Workhorse Holdings, I believe is what this is. Electric trucks and delivery drones. So there's been so much hype around electric vehicles from Robinhood investors, and here's another one that's getting a lot of interest. Just over $500 million market cap, reasonably sized company, but again, no earnings yet. Ideanomics, I still don't know what they do. When I read a description of what the company is, there's just a lot of buzzwords, and I'm just not sure what this is. Ideanomics. I've seen some say it's a play on artificial intelligence. I just don't know, and I'm not so interested because it doesn't really check any of the boxes I'm looking for in order to want to dive deeper into the company. Apple, obviously the biggest company in the world. Awesome return on invested capital. It's expensive right now, guys. I remember when Apple, I think I've seen it at like a 15% earnings yield, maybe a year and a half ago. And the 5-year average price to earnings ratio for Apple is 16. Okay. So at 28, it's about the most expensive that I can ever remember Apple being. Okay. There's some people that might look at that and think, well, we know it's a great company. Warren Buffett bought it not that long ago. I don't want to miss out. What if it keeps going up and I miss out? What I would say to that is that it's fine if you miss out. There are so many other ways to make money in the stock market. You don't need to buy the best stock. You don't need to buy one of the top 10 stocks, okay? You need to follow your investment principles. And for me, this is just way too expensive for me to even consider, no matter how great the company is. The price of a company, I should say, no company is so great that, if you spend too much, it's still going to be a great investment. And I think this is just a little bit too expensive for me right now. Obviously, the super investors love Apple. So it's a great company, but I'm sure most of these super investors didn't buy it anywhere near today's price of $360 per share. We've got Shell. Now, Shell is interesting. Shell is a blank check company that announced that it's going to merge with Hyliion, which produces basically electric trucks. It retrofits diesel trucks to be able to, so it's a hybrid diesel electric truck. Okay, so that's kind of interesting. I don't know if you followed Nikola Motors, but that stock just took off. So this could be very interesting stock from a trading, kind of a short-term trading perspective. And I think that's why it's so popular in Robinhood right now. But it's so early. I mean, it hasn't even merged yet with this electric truck company. So I wouldn't be surprised if the stock just took off, but I don't play that game. I don't play the trading game, so I'm not going to touch this thing. But it'll be interesting to watch to see what it does. Amazon, obviously a fantastic company. It only shows a 10% return on invested capital. And like I said, a single metric like this won't always capture how great a business is. We know that Amazon is a fantastic business. But I was just talking about how I thought Apple was expensive. I mean, guys, Amazon is like 4 times as expensive right now as Apple from a price to earnings perspective. You look at the earnings yield at 1%. I mean, look at this, 4 to 1. It's 4 times more expensive based on earnings yield. Like I said, there's a recent write-up in Value Investors Club. Check that out if you're considering investing. I would need the price of Amazon to come way down before I would consider investing in Amazon. Like I said, a viral vaccine play. I mean, there's just nothing compelling to me to consider this as a long-term investment. There's a lot of traders, I think, getting in and out of this one. Plug is a hydrogen and fuel cell systems play. Again, renewable energy seems to be super popular right now with what's been happening with Tesla just taking off. So it looks like investors who maybe feel like they kind of missed the boat on Tesla are looking for some other renewable energy companies, particularly transportation companies, to kind of get in and feel like they're part of that electric vehicle action. Like I said, there's a short write-up in Value Investors Club for Plug, so check that out if you're going to buy and hold for a while. If you're trading, there might not be much in that write-up for you. And then SHIP, Synergy, dry bulk commodity shipping. I have no idea why this is on here. Initially, I was thinking maybe it was, because oil tanked, but this isn't. It's not an oil company. It's dry bulk commodity. So I'm not sure why people are interested in this. Maybe it's because it's just such a small cap company. It's like a penny stock that traders are playing because there's been a lot of volume, something like that. So, I'd really like to see more in the way of long-term investments here from the Robinhood top 10. But it seems like there's a lot of short-term kind of trading with penny stocks in here, which, that's just not my game. I'm not going to fault people for doing that. And I think it's a really hard game to win. It's like going into the casino and, playing blackjack or poker. And, sure, you can win a lot of money in a short amount of time doing that. But if you repeatedly do that, if you go to the casino, weekly, over the long run, the vast majority of people who are playing that game are going to lose money. Okay, the odds are against you over the long term. I made a video not too long ago where I differentiated between investing and speculation or gambling. And investing, kind of a simple definition for investing is that your net present value is positive. Okay, so the odds of you making money, if you compare those to the odds of you losing money, you have an edge. Okay, the odds are that you will make money. Your investment process, if you kind of extrapolate, how your investment process is going to play out over time, you have an edge. Okay, speculators or gamblers, if you take the odds of making money versus the odds of losing money, you have an overall, your overall odds are that you're going to lose money. Okay, and what I see here in the top 10 for Robinhood investors, if you guys keep playing this game of buying these stocks that have all the X's, it's not a pretty picture. It is not a pretty picture. So, best of luck to you. But I'm hoping that over time I see more and more kind of long-term compounder plays in this Robinhood top 10 versus these kind of shorter-term speculative bets. But, it is what it is. And I will keep reporting on it each week and giving my 2 cents. So that's all I got for this week, guys. I hope you enjoyed this. Stay safe out there, and I will see you in the next video.